We are almost there, but not there yet. Okay, so there is still a distance from a vaccine, but all this positive news is actually helping to support the market lah. Okay, the third thing that we want to watch is these weekly job data. Okay, job data has taken a more important significance in recent weeks and going forward. Okay, why is that so? Because these employment data will first of all give you, or rather give the Americans a feel of the economy, especially on the American citizen side. Okay, so that will affect or rather impact the vote that is going to the vote swing in the US presidential election. Okay, so these job data, I think we from now on we have to just keep monitoring it every Thursday and Friday lah. Okay, and the fourth thing you need to take note is, of course, I mentioned before, VIX. Okay, ever since VIX hit a high, I think sometime last Monday or the week before, it has since come down. Okay, so it coincided with this consolidation phase lah. Okay, so that VIX is coming down. So for those uninitiated, right, VIX is always inversely proportionate to the stock market lah. That's what a lot of people are saying. Okay, so these are the four things that we may want to look out on the macro sense. Okay, on the local scene, right, I think a lot of people are very disappointed that our market didn't really run. Okay, we are very lackluster. I think one very important factor, which I also mentioned in my last commentary, is that we don't have any big tech company. Okay, we are SDI is full with banks and property, and out of this property, right, a good portion of it is REITs. Okay, so that there's not much or rather Singapore market don't really benefit from these bull tech run, so to speak. Okay, however, one thing to take note is that actually last Thursday, right, for a lot of charties, right, they have a bit of a scare. What happened is that in late afternoon trading, right, our SDI actually briefly touched the recent low of 2478. But luckily we all closed above that, and since then until now, we have been flirting with that level. Okay, flirting with that support level, but we have not go down yet lah. So in general, although there's no excitement, our Singapore market is holding out pretty well, I would say. Okay, and there are a few blue chips that are trading near the low of their range. Okay, basically for myself, right, I'm actually looking at two sectors. Okay, basically they are the banking and the property sector, the major constituent in all the STI index. Okay, for banking, right, actually why banking? Because you see, our market, we have no more news-driven event going forward in the next 2 to 3 months. Okay, so the major news-driven event is basically on the macro side. And banks, relatively speaking, are so-called our proxy to the macro. They are most sensitive to the macro environment. Okay, so banks is one sector that I'll be looking at from a trading perspective. Okay, and for Singapore, right, we have been, or rather the Singapore government has been resuming all the business activity stage by stage, as we can see for the past few weeks. Okay, so although on the low interest rate environment, banks is not going to, I mean, the interest income and interest income portion will be suppressed. Okay, but I was hoping that this resumption of business activity will leave the non-interest income portion. Okay, and of course, one bank to take note, I think it hit the news this morning, was UOB. Okay, so what happened was that UOB actually has been trading near their support line at about 1930 plus. Every time they hit 1930, they'll rebound a bit. Okay, and I think last week they hit below that, but very quickly within 1 or 2 days, they came back up to 1930 plus. I think this morning there was a Business Time article that reported that they have do some higher freeze, some promotion freeze because of in anticipation of declining earning revenue going forward. Okay, but what happened is that, well, you see, despite this news, right, we are still trading at as of last I can see is that we are still trading at 1934, so it's still well at the support line. Okay, I would say that although the fundamental may not be so rosy at the moment, but market always move for expectation. Okay, so UOB is one counter that I'm looking at. Okay, of course, some may ask, 1920, 1930, 1,000 share will cost me about 19,300 over dollars. Okay, and the range is like 1930 to 2030, so $1. So to make that $1, I need to fork out 19,000 over dollars. Okay, so what happens is that actually I'm looking at the DLC. Okay, for lower capital outlay lah. Okay, so that I don't have to fork out so much money just for trading purposes. Okay, I mean investment purposes, of course, you can fork out 20K, 30K, 40K, but for trading purposes, of course, the lower capital outlay, the better. Okay, and another sector I'm looking at is actually properties. Okay, I think this morning there was a report that says that in Singapore, right, the 2020 new home sales have already topped the 2019 home sales already, despite this pandemic.
That's incredible, right?
Yes, it is. It is. In fact, the private home take-up rate, right, in August, right, is 16% higher than the July one. Okay, wow. Which is, I mean, it's our Chinese 7 month, and with this pandemic, so this is really unexpected lah. Okay, so for property sector, right, I'm actually looking at capital land. Okay, a lot of people may be asking, why capital land, not city development? Okay, because city development got the volatility is there, whereas capital land is the volatility is less. Okay, I think one main reason for capital land is because they are one of the largest diversified property players, not only in Singapore but in Asia as well. Okay, I think there was a report that says that China August property investment has hit a 16-month high. Okay, just last month now, August. Okay, and capital land revenue, right, I think 50 to about 60% come from China. Okay, so I mean, if you have a choice of capital land and CDD, I would have choose capital land. Okay, I'm not really concerned about the very tight the tight spread, like capital land moving from 372 to 379 kind of thing, because in the same vein, right, I'm using leverage as well lah. Okay, I'm using the DLC to leverage on this very small uptick to magnify my gain. Okay, and capital land has been trading for weeks. Okay, also near their support. Okay, 370. Okay, if you have noticed, they have very seldom break below this 370. Okay, most of the time it's at 371, 372, and whenever they break below that, they will just come back the next day or even on the same day. Okay, and for those technical analysts, right, I'm also looking at the Bollinger Squeeze on this counter as well. They have been squeezing along the 2 Bollinger Band for a long time, and hopefully with all these property sector upticks, we will see a trend up from this squeeze. Yeah, so these are the 2 counter, or rather 2 sector I'm looking at the current moment.
Okay. Thanks, Dan, for sharing. I think it's a very good update. So let's take a look at the Hong Kong market right now. Okay, of course, Hong Kong market has been definitely more active. So maybe Ella, can you share a bit more on the updates on Hong Kong as well?
Yeah, thanks, Ethan. Thanks, Dan, for the coverage for Singapore market. I think compared to Singapore market, Hong Kong market definitely have more tech names, so you wouldn't miss the bull run in what happened in the US, because Hong Kong, the tech names are following the US names quite closely. So as we have known, the US tech has been undergoing a consolidation or slightly rebounding from the past week. So we're also seeing that happening in Hong Kong market. So you can see the Hang Seng Index was slightly up since the bottom that we have notched around 24 to 23 that in last week. So it's gradually going up. So following the general trend that's led by the US benchmarks, and of which of this Hang Seng Index, I think there are some stock that has caused a lot of attention, either because of recent PR issues or because they're good earnings. I think one of them is Meituan. So Meituan has been performing quite good since this year. I think the share prices has been up about 89% since start of this year. So it's a very good performance. But I think recent there's a PR issue because most of these riders are not enjoying a fair treatment in their career. So so because Meituan has developed some really advanced AI system to track the riders. So it purely means to to push the time limit that is allocated to each rider. So say it's 1 km ride for a rider, and then the rider has to finish everything in about 15 to 20 minutes, including picking up the order and then deliver to the home. So I would say so recently it has caused a lot of attention in the society, and I think it's a pretty much near-term headwinds for the stock as well. You can see Meituan has been dropping recently. Okay, we have been seeing Meituan prices testing this resistance, falling from 278, where a notch in beginning of September. It's a peak 278, and then it's currently testing this 247 resistance level that happens to be a 38.2 Fibonacci retracement. So I would say the price is under pressure. Beside this near-term tailwind, we also see some, pressures from its recent earnings. Although I would say it's a very good earning because the profitability in second quarter has substantially beat market expectations. So it was notching a record high at 11% at nine net profit margins. So which is at historical high for Meituan, okay? But I would say such a margin beat it could be something, one-off, because if we notice that what happened in the second quarter, we will see the riders will have a lower pay during the COVID-19. If we look into the details of what the management has said, some of the riders, because they suffer from job losses, they don't have a job during that times when COVID-19 is hitting the nation in China. So a lot of people just go to become a rider for temporary reasons. So this will push the labor wage to a lower range for Meituan, so which would help to boost the operating margins for the near term only. And most of the analysts in the economy, in the Wall Street are saying, it could be a long-term tailwind for Meituan. But I would say, take it with a grain of salt with this data. It could be a one-off situation that happened only when COVID-19 hit the nation and when economy is not doing well and people have no choice with their jobs. So the competitive landscape still remain very, very intense. It's still at half market share with Ele.me, the other food delivery platform. So I would say the competition will stay very fierce in the recent years. And as China slowly goes back to normal and more people probably, find hopes in finding other jobs, more stabler jobs, they would see, we would expect this rider cost to rise within times. So I would say this profitability beat could be a one-off thing for Meituan, for those food delivery platform as well. So so not only this PR issue has caused some, headwinds for this stock, but I would say fundamentally until next earnings, which is their September earnings, until we see, substantial pickup in other business segment, including their, some of the new business initiatives, like delivering fruits or warehouse sharing, those areas, we couldn't say, it's a sure buy for now. So I will stay neutral for Meituan. Right, I think beside Meituan, another stock has drawn a lot of attention, which is JD. So JD is actually not the new stock to to people who have been familiar with Hong Kong and US market. It has been listed since 2013, so it has been around 7-8 years already in the market. but it hasn't been performing very well compared to Alibaba or any other e-commerce names like PDD, who just got listed in 1 or 2 years, and then the market cap has, tripled, already since this year. So why this JD has not been favored by capital market? I will think the first and the prime reason will be it has been a platform that is selling mostly those low margin products, which is the home appliances. It could be large volume. The GMV looks very good because if you buy a TV, it's a large piece of it comes with a high price, but in terms of the margins, it's very low. So if you look at JD, the margin, the gross margin is around low double digit, and if you deduct the fulfillment cost, which is the cost it need to store this large piece of furniture or large piece of home appliances, or the delivery rate that it costs, it will be a single digit profit margin for the company only. So I think because of this low margin, it's not really favored by the capital market for so long. Especially in 2018, when we're having some PR issue for Liu Qiangdong, which is its CEO, so he's having some PR issues in the US. So at that time, JD prices even dropped back to its IPO price at 18. So it was a huge, it was a long story for JD to come to its current stage. But I will say after this second quarter earning, I will call it a new norm. Why I call it the new norm? I will say I see robust growth in its first, first party business, which is the business that it built the warehouse, it built the logistics, and it built the inventories and sell it from its own warehouse. And then the third part is the logistics system is really working quite well. So logistics is also arguable issue. So if you have been investing in Alibaba, remember what Jack Ma has been saying for about JD. He's saying that JD has been using a very heavy cap model, which is not really catering to the market need. Yes, indeed, JD has been spending huge millions of dollars into its logistics system. It now has a logistics system that's linking around 200 to 300 cities, and it has around 700 plus logistics centers around the world, which will enable it to deliver anything from its platform within 1 day or the other day. So it's pretty much like Amazon Prime services. So think of it, the potential of it is really big. And this advantage was shown very obviously during this COVID-19 when other logistics decided to postpone their services in COVID-19. JD still deliver. That's why we have seen a very well growth in both Q1 and Q2. But by the time of Q1, people are not sure whether this trend are going to continue or not. They might think it's a one-off growth in terms of the GMV. But I would say after Q2, I'm more certain of this trend. This logistics system has been performing so well, and it's starting to show the potential in the future. So right now we have seen that JD have more strategies, including to sharing this logistics system with other parties. So even your Walmart, your other sellers who want to use this logistics system to deliver fast and on time, you can also use it, pay it, and then you can use it. So from this point of view, this logistics system, which has been dragging the earnings performance of JD, will start to shine in the future. It has been profitable since this year, and it will be profitable looking at the trend right now. So I would say, given these 2 points, JD fundamentally is looking so much better. I will say it's a new norm, so different from what it used to be. Although it just reached this profitable stage since this year. But I would say this is a very nice trend, and we'll continue to see improving margins since JD has some new initiatives in this AI system on how to make this delivery faster and in cheaper ways. So yeah, I'm more bullish on JD compared to Meituan. So I think this is the two stocks that's catching the market eyes in recent tradings.
Thank you, Ella, for sharing the very deep insights on these two very exciting Hong Kong stocks. So over to Alvin. So Alvin, so in terms of leverage products, right? How can investors and traders utilize them to actually take advantage of these two hot Hong Kong stocks?
Yeah, sure. Can you hear me well?
Yes.
Yes.
Okay.
Absolutely.
Okay. Cool. Okay. Thank you. Yeah. Thanks, Ethan. Thank you, Dan and Ella, for the analysis. And I think if you have any view, short-term view, bullish or bearish, you can consider using this daily leverage certificate to express your view, because daily leverage certificate, or we call it DLC, is simply a leverage product that allows you to get a leverage return from ups and downs of the stock. And I think I can quickly share with you by using our website. Let me quickly go to share the screen. Okay. So this is a AA stock screen. Let me go to our website first. All right, so this is our website, SocGen's DLC website. And as you can see, this is the homepage. And then you can, if you want to understand more about DLCs, you can go to products and then do a search. And then here you can find all the different DLCs available. At the moment, we have 127 DLCs available. And then basically, we have DLCs on all the stocks that Dan and Ella have covered. And then, for example, if we pick a, for example, JD, as in JD has been, Ella is more bullish on JD than Meituan, right? So, but okay, if we look at JD just for today, right? Just for today, we can see that the long, there are two long DLCs that went down because JD today is down, and then the short DLC is up with a similar magnitude. And then if we click on to, for example, this JDA, DJDW. So you can see that today JD.com is down by roughly 1%. And then this DLC today is down by roughly that percentage times 5, because it is a 5 times long DLC. So you can see that this DLC is trading at a 5.75, and then today is down by around 4.8-ish%. So basically, on a daily basis, you can expect the daily percentage change of this DLC to be very close to 5 times of that percentage change of the underlying stock. And obviously, if today JD is going up instead, say, for example, up 2%, then you can expect this DLC to be up by roughly 10%. So this is how DLC works. And so if you have any short-term view, because DLC is a leverage product, so usually we don't recommend people to hold any leverage product for too long. It's definitely not any like a buy and hold forever product. But if you have any short-term view, I think a DLC can be a first of all very simple leverage product for you to understand, and then also in terms of holding cost is also more competitive than many other leverage products in the market. So before I end my session, I just would like to also share with you some info that we see, some observations that we see on the DLC funds flow. For example, in terms of tech stocks, right? So yesterday we all saw that the Xiaomi actually went down by around 5% because the vice chairman sold his share, lowering his holdings from around 2.7% to just 0.7%. So that made Xiaomi go down by around 5% just yesterday, and then we saw a huge inflow into the long Xiaomi DLCs yesterday. So I think if you think that, for example, right, if you think that Xiaomi, the fundamentals are unchanged, and then you're still, having confidence on it, and you can actually try to, for example, bet on a rebound by looking at the Xiaomi long DLCs, and this is what many investors have done yesterday. And today, at the moment, Xiaomi is roughly flat. At the moment, it's down by just one tick. It's down by just 0.2%. So still pretty much same price as yesterday. And so this is what, as a short-term, like a trader, probably this is one of the stocks that they will look at for a short-term rebound. And actually, besides Xiaomi, I think, for example, yesterday night, right, Apple didn't announce the new iPhone yet, right? So, and then yesterday, you saw that, for example, the Sunny Optical and AAC Technologies, these two stocks being suppliers for iPhones. Yesterday, they went up by a lot, because market was expecting iPhone launch, right? And then it wasn't announced. So today they were roughly flattish. But then, for example, one of the things that we can think about is to, whether there might be some, short-term bearish movements on these two stocks. And if you think so, then you can consider like a short DLCs on Sunny Optical or AAC Technologies. So yes, so that will be it for my part today. And if you have any questions, feel free to ask in the Q&A box, or you can also call our hotline or write to us after today's session. Thank you.
All right. Hey, thanks, Alvin, for sharing. I think it's pretty interesting trends that we are seeing right now as well. Okay, then let's move on to the Q&A. So right now, I think Q&A with a couple of questions. So I think this one is more for Ella. So Kenny is actually asking, what is the moat and competitive advantages of JD as compared to Alibaba, because they are pretty strong competitors in a sense.
Yes.
Can you share more?
Yes, I think I kind of mentioned in my previous previous statement.
The inventory one, right? Yeah.
Yeah. So I think what Ma Yun has previously said about JD was something that he wants to do. Actually, even though he said that JD has using a very heavy cap model, which he doesn't like himself. But look at what Alibaba has been done in the past years. He has tried to build his own logistics system in order to fulfill a faster delivery for itself, for the orders from Taobao and from Tmall. So actually, I wouldn't say it's a true opinion of himself, even though he kind of criticized JD for investing huge of capitals into its logistics systems. So I would say the mode of JD, as we have discussed, one of the important modes it has is the logistics system it has built already. I would say the logistics is quite complete already. So even though you're in third tier or fourth tier cities in China, you can still have this same day delivery or second day delivery available, even though you order something very, very large pieces like a TV or a washing machine from JD's. And at this moment, what Baba has is a Cainiao system. So Cainiao system is not really his own logistics system. It's more of a logistic platform that's that's able to track all the other third-party delivery services providers, those vendors' services. So compared to those, I would not say, you can see these advantages during this COVID-19 very clearly, because when those vendors decline to service, they couldn't fulfill the standard to continue to service during COVID-19. Alibaba has nothing to do with that. So Alibaba couldn't force them to function as well. So I would say that's one of the most important mode that Baba has. But Baba still have its advantages over, over the product mix. So we have been seeing that JD has a concentration on those home appliances, so-called the low margin products. this ratio has been gradually improving. So I think last year it was still accounting for 75% of its total revenue, but this year it was only accounting for 55%. So more revenues are getting from, fast-moving consumer goods, and also those fresh fruit and vegetables, which used to be, something that Alibaba has provided. But Alibaba still has its core competitiveness because it's more, it has more apparel or cosmetics, and those that cater to female customers, which usually means higher margins to the platforms. So I would say both platforms still has its mode, but I think this mode for JD, once it's open to the third parties like Walmart, even some small third-party vendors, sellers on the platform, you might have even more potential compared to Alibaba. Yeah.
All right. Thanks for sharing, Ella. So let's move on to the next question. I think this question is more for Alvin. So Kenny has also asked, is it advisable to actually hold a DLC over the short to mid-term, like for example, several weeks?
Well, I think if you understand how DLC's leverage works, right, then you can definitely hold a DLC for longer. Because the reason why I emphasize on the daily leverage is that the leverage is fixed every day, but then it doesn't mean that the leverage is for example 5 times, right? It doesn't mean that the leverage is 5 times for however long you hold. If you hold a DLC for say 10 days, right, and then after 10 days, and then you look at the latest share price, and then you compare that share price with the share price on day 1, and then you get a percentage change in the mother's share, and then you calculate whether that percentage change times 5 would be what the DLC can deliver to you. You realize that it is probably not the case. In that case, you might see that the percentage can be higher or can be lower than that, and this deviation has actually nothing to do with the cost or like a rounding or anything, and it is simply a mathematical like a result, because if the stock goes up a couple of days in a row, as in a trend, then you will probably benefit from this path, and then you'll end up getting more than 5 times leverage. But then if on the other hand the stock is like a very volatile, if for example like up 3 or 4% in one day, and then down by another 2 to 3% another day, and then very choppy movement, in that case what you get will probably be less than 5 times. So that's what we call compounding effect. And I think if you understand this effect, then yes, you can hold on to a DLC for longer. And if you go to our DLC website and check out some, for example, say less volatile stocks, actually the tech stocks previously, like before the recent slight correction, they have been on a very concrete trend, right, a bullish run, and you can see that during those time, those DLCs actually delivered so much more than 5 times return, and you actually got a huge compounding gain during those periods. So our website has a tool called a historical compounding return tool that helps you understand more, this compounding effect.
Thank you, Alvin, for sharing this. If you all like to know more, right, please go to the SocGen website. Just Google DLC SocGen. You probably land on the website. Alternatively, if you all haven't joined the tournament, please join the tournament. Okay, I'm going to say this again. I know I said it once, but I'm going to say this again. Right now, Singapore's biggest tournament, it's all DLCs. Of course, virtual money, no risk to you at all, real prizes. So the first prize, we're looking at $4,000. Second prize, $2,000. And of course, we have daily winning prizes as well, $60 Capitaine vouchers. And if you make 3 trades, we'll have a lucky draw for one lucky winner to actually win the Apple Watch Series 5, which is worth $600 easily. All right. If you haven't registered, we'll be selecting 2 lucky winners to actually win an AirPods Pro each, worth $400. Okay, so everything is there. Go to our website, click simulation on the top, register, start trading, start experiencing it, and probably I'll see you at the top. Okay, so I think right now we are a bit short of time. It's 12:42. Market's going to resume very soon. So we'll end this session here, and thank you everybody for attending this. Thank you my fellow panelists as well. So next week, probably we're going to be at the same time. We have the next market commentary. All right. Thank you.
Thank you. Bye-bye.
Thank you. Thank you.
Thanks.
Bye-bye.
Thank you.
Bye-bye.